I'm pleased to welcome our next presenter, Brad Rogers, Chief Executive Officer of Red, White, and Bloom. Shares are traded in Canada under the ticker symbol RWB and in the US under the ticker symbol RWBYF. Red, White, and Bloom is one of the largest cannabis operators in the state of Michigan. It is developing one of America's largest indoor grown CBD hemp facilities in Illinois, and is pursuing licenses and/or acquisitions in attractive US state markets such as Massachusetts, California, and Florida. Brad is one of the most tenured executives in the cannabis industry, holding executive roles at several Canadian LPs, and eventually making the early transition to focus on the US opportunity. I would now like to turn the call over to Brad to tell us a little bit more about Red, White, and Bloom brands and the opportunities ahead. So Brad, please go ahead.
Thank you, sir. Thank you, Andrew. Really good to be here. Thank you for having me. Lots of exciting things going on right now in the space. Red, White, and Bloom obviously was the etymology of a number of things. I was at a Canadian LP that I went in to help effectively help get to square because an investor friend of mine was in there, and we went from 2,000 patients to 75,000 patients, and became the #1 medical player in Canada. And the idea was to actually go south of the border and move into the United States and be the first real cross-border initiative that was trading publicly. And so the whole point of it was to take advantage of what was embryonic state of the United States, and it was just coming to fruition, which was the most exciting piece. And we had an opportunity in Michigan to be able to go and take a position in a small Michigan initiative, and start that as our beachhead. But unfortunately, the board didn't want to move into the United States, and they saw it as a bit of a risk there. And I left the company, and they went their way. They hired a CEO and did what they did, and I fortuitously made one of the smartest decisions in my life and most exciting decisions in my life, and move into a market that is really truly a market where we're really happy to be actually performing, and where the markets are demanding you to perform, and doing all these great things that we want to be able to do. And if you look at my history, from Metrum, selling it to Canopy, and from Cantrust all the way through, we were one of the first EBITDA positive companies on both sides. And so, fundamentals have always been what's driven me. And I think in a market like this that is so highly profitable, you can grow profitably. And that's our initiative, and that's what we intend to keep on doing. We are new to the market, but late to the market. So, early to the market, but late to the market, I would say. Andrew said we're early to the market, but really and truly, we've only been doing this for about 1.5 years in the United States. But we've, I think, taken a really strong position within what we call our beachhead of Michigan. We've got about 22+% of that market right now, and are really living to our philosophy of really drilling down and becoming a critical mass player in whatever state we go into. And so what we've built to date was an overall footprint in about 1.5 years. Is 660 employees, 150 bud tenders, 38 technical growers. And so if you look at my history, what I've done is actually taken the opposite approach to what was effectively a basement, the evolution of the basement. So this was a clandestine business for a very long time. People were underground. They were growing in 10 lights, 20 lights, whatever it may be, maybe even up to 10,000 square feet. But really and truly, this is a commodity business that you need to get to scale. You need to get standardized. And so that's what, over the period of time, I was able to do within a real scale business in Canada. And so I'm bringing all that acumen and all these technical attributes that we're able to accumulate over the period of years I've been in this business down into the United States, and really create a very consistent, strong, quality-based foothold within whatever markets we're going into. And that's why when it says 38 technical growers, I don't have a master grower. I don't have somebody who is, got a magic wand and is waving over the crop saying this is the best, dude. This is an actual science-based approach that we're taking. We have PhDs and we have horticulturalists that have been trained in the cultivation, horticultural aspects of cannabis and how to optimize these. And so, and that's how you get to scale. That's how you get to consistency, and that's how you get to standardization, which I think is going to win out in the end, which I know will win out in the end, as a matter of fact. And so, again, that's how we're building our team, and that's our philosophy. We're now, operating 468,000 plus square feet. We've got an outdoor grow going. We've got 3.6 million square feet going in Illinois as well. So, and I'll drill down on all of these as we come to them. But just in terms of the macro, we're active in 3 states with active licenses. We're really operating in 2 effectively. But even more than that soon to come, which I will then obviously touch on in a minute. We got a 3-tiered brand strategy. We've got good, better, best. And of course, that's more of a CPG approach, which I think will apply because, again, this is a commodity-based product that where brand will actually be the driver of what this what your value proposition will be. We've got 10 operating dispensaries right now in Michigan. We got 8 additional licensed and owned properties ready to go. And again, we pushed that out because of COVID, et cetera. And we got our target is about 35 by Q4 2020. And so this is a very interesting, really high growth market. I think big opportunity within it. We took a very, very dominant foothold in it, and I can tell you a little bit about that when we get to the Michigan piece. But up until this point, we have not used any banks, and I guess everybody's probably seen the news release that we just did the bought deal at 15, and we upsized it to 25 because it was overwhelmingly oversubscribed. So very, very positive news for that. But up until that point, we've raised over $100 million, just friends and family, and we've got some significant upside and revenue on that stuff in terms of what we've invested in so far. So our 2020 looks to be somewhere in around 166 million with about 50 plus $1 million of EBITDA. I'll adjust that on the fly here because of COVID, et cetera. In terms of what we've seen, some ripple effect, not necessarily losing anything. We're just pushing some stuff out because of what's going on. So current operating pieces, which you can see there, is Michigan, Illinois, and Massachusetts. We got Florida and California, which again I'll touch on when we go a little bit deeper. But go ahead there, Ty. Move on down. So again, where we started, which was our effective beachhead in Michigan, it was a very exciting opportunity. There was 2 stores. The way we structured this, which is a very, to a degree, complex piece, but is exactly why we are the foothold and real dominant player in Michigan, is the way we structured this deal. RWB is an effective investment company, and we raised that money to invest in a private company called Pharmaco that's operating in Michigan right now, and it is the acquirer of and license holder of all of these assets that we have operating today. And what's going on is that we have a put call which we just exercised on Pharmaco to be able to take that under RWB's wing and be able to report those earnings that Pharmaco is doing right now and the entire operation. So keep going, Ty. And we look at that operation today. We've got 41 licenses, over 21 individual facilities, 10 dispensaries going, 8 ready to open, 5 cultivation facilities of over 1 million square feet that we'll have coming on staggered across Q4 and Q1 of next year. And those are effectively what we're operating right now, and those are examples of our stores. And of course, the branding piece of it we'll drill down on again when we get past this slide here. Keep going, Ty. And so we look at the stats in you're going way past. Oh, so you're down here. So yeah. So when you look at how we're going to apply the brand strategy effectively to what's going on in the market. These were mom and pop shops effectively that were doing very, very good business that we took under the the Pharmaco operation. We've consolidated those operations on best practices, buying power, operational efficiencies, ERP, and we're just finishing all those pieces right now to bring it under an umbrella. When we have those operations humming, what we want to do is banner those stores under a brand where we can actually leverage continuity, consistency, quality, product purchasing power, et cetera, and some brand on the product side, not just the actual storefront and store banner. So, when you look at what's gone on, we've done in Michigan alone over 350,000 transactions per year, which is a very, very robust number. But to apply what's going on in the market with a brand such as High Times, they've been in operation for over 46 years. So in my eyes, that's the only brand in cannabis. And so when you take the top of mind, the biggest mind share brand in cannabis and apply it to your stores, and then utilize their back end of what they've got going on the digital side as a High Times media front, they get over 9 million unique visits per month. So we're able to leverage that whole engine to be able to drive the store and footfall traffic to our dispensaries in Michigan and really increase that footfall for a very nominal fee. So the deal that we put together, I came from the brand licensing world in the entertainment side. And I'll tell you, this deal is of the best deals I've ever seen to be able to leverage such a brand as High Times. And so we're very, very happy with the economics of this deal and feel it'll be incredibly accretive for RWB as a banner brand. And when you look at what's going on, where we're able to apply these brands are, High Times obviously is the banner store. They've got a sub brand called Culture. And we see that as being a good fit for our national CBD play on the tinctures and topical side. And of course, when you look at the potential of actually doing a High Times brand, we're going to obviously disseminate the quality and the consistency of the High Times name and apply that to what we're doing on the product side and really get a premium and some volume out of that as well. So it's a real synergistic relationship that I think we can drill down on and really get some value out of beyond that of what is just the apparent slap a High Times brand on the store and hopefully it'll come. I think there's a lot more strategy and a lot more depth than what people may think that it is right now. So we're very excited to roll that out in the very near future.
Brad, can you touch on Platinum X?
Yeah, absolutely. And I think again, brand new to the newswire as of a little while ago. I think what one more very exciting piece is that we bought the #1 vape company in Michigan called Platinum Vapes, and so that deal is a binding deal. We're going through the definitive right now, and we're very excited to close that deal in the very near future. I'm thinking 48 to 72 hours. That should be completed. So I'm knocking on wood as I speak, but that in and of itself, we get beyond that of just the brand and the distribution and the revenue that they're doing right now. It's a phenomenal team with a big vision of where they see this product going. So beyond that of being the biggest player in Michigan, they're doing really strong revenues in California, and the trajectory of the value of what's going on in California is phenomenal. And they've entered Oklahoma, and I believe 3 or 4 months in now of doing business in Oklahoma, I think there's somewhere in around for hearsay, but let's just say $400,000+ in revenue in just the fourth month of business, third or fourth month of business. So phenomenal trajectory of plugging in markets. We've got another announcement with PV beyond that as well. They're entering another state, which is soon to go rec, and it's a great strategic entry into that market for us as well. So lots of news coming on all of these brand and product sides of things. Beyond that of what we've got going on the Michigan side, which is again a very strong anchored foothold dominant position in a very robust market that is projected to be doing somewhere around 1.3 to 3 billion after rec hits fully and gets fully rolled out. So, a ton of upside and opportunity with all the strategy that we have in place right now.
What's
So,
the headline revenues there, Brad, with Platinum?
I'm sorry?
Some of the headline revenues, like current revenue.
Yeah, well, look, I mean, I think it's public that they pressed that they're doing somewhere around 70 before, I believe, the Oklahoma and this new state entry. And of course, they had a very steep upward trajectory of revenue as well. Even in California, they're doing record sales month over month. And of course, Michigan, they've got the strongest position in the vape category by, I think they have at least 50% of that market from our calculations. So it's incredibly strong, so much upside with respect to that brand. And beyond that, of what they've got just on the vape side, they've got a really strong chocolate line and edibles line that is taking off like crazy right now in California. So they're tapping into their 700 plus points of distribution, which is incredible. So I think, again, the upside to complementary brand extend and product line extend this brand is phenomenal. And then, of course, what we're able to do with Dovetail is to actually push the Platinum Vape stuff, push the High Times branded product onto that as well. So lots of upside on that side, on the product side, and beyond that of what we have as core distribution within our Michigan foothold. And then once we move on from that, the potential of the Platinum Vapes and High Times with the culture to go national in a business that we were hedging on, that's turned into a real business, believe it or not, is Illinois. So Illinois, we have the biggest footprint in America of CBD production under 80 acres of glass. And if you see the picture right there on the screen, it's an incredibly immense facility that you really can't get the scope and the scale of until you're there. I mean, if you look at the road in front, those are tractor trailers parked on the far right side of that picture. And that kind of gives you, contextualizes the scale and the scope of it. So it's absolutely unbelievable to be able to get that up and going. So it's a phenomenal opportunity, with respect to that. So I think what we need to do is look at this facility as a phenomenal opportunity to use this as a center of excellence in terms of cultivation and production of CBD. And what we're able to do is, because it's indoor, what we're able to do is actually control the grow process in a very acute way. And so what we're able to do is go from seed all the way to final end product with chain of signature. So what that does is gives us the ability to qualify ourselves for API, which is active pharmaceutical input. And so when you look at what active pharmaceutical inputs are, is a pharmaceutical grade ingredient. And so what we're able to do, because of our growing acumen and our horticultural practices and our chain of command of the product, was we got a $25 million offtake from a UK pharmaceutical company in the UK, and we started shipping that just 2 weeks ago, as a matter of fact. So the first shipment landed in the UK of that order over the next year. So that's pretty exciting, and it's a found business that we really never even looked at. And then on the complete polar end of that, we have a very robust bud business. And so what we did was selected our cultivars, our hemp cultivars, or CBD cultivars for that matter, for high yield CBD and bud structure and terpene quality. And so what you'll see coming out of that facility is a very significant cannabis looking, feeling, smelling product that we're able to actually put into pre-rolls, into flower products, and distribute nationally in convenience and gas. And so we're seeing a big business there. We just announced, as a matter of fact, a $20 million offtake from a Colorado company. I mean, go figure, Colorado's coming to us for bud, CBD bud. And so, we just did a $20 million offtake for the last 6 months of this year and $40 million for next year on that business. And so we're selling that somewhere in around $200 a pound, where we thought we'd be able to only sell it for somewhere around 80 to 100. So again, the quality and consistency of what we're doing out of that facility is bringing the rest of the United States to us looking for a product. And so that's the tip of the iceberg in terms of what we think we can do out of that facility, just on the CBD side. So I think it's an incredible opportunity for us to be able to drill down and make this a real opportunity beyond that of the THC piece. But that doesn't mean we've given up on the THC license discussion. So what we're doing right now is engaging some of the other facilities other jurisdictions that have gotten licenses that really haven't been able to capitalize themselves or put themselves in a winning position with their licenses. So we're looking at acquiring a license to move into that 3.6 million square foot facility and taking a dominant position in there. So when you look at the 20 to 200,000 plus square feet of the potential of that facility, it's effectively a closet in that 3.6. And so when you look at 200,000 square feet of canopy that we're able to produce out of there expeditiously, we'll be able to actually harvest in 4 months and control pricing in that state in 6 months. And the potential of, if you even just take a conservative $1,800 a pound of THC that's way under the market right now, that's 150 to 200 million dollars of revenue just out of 200,000 square feet, plus all the rest of the revenue that we're creating right now. So the upside of that on just a hedge is phenomenal. And so beyond that was the macro position of what we actually bought it for in the beginning, was the descheduling of cannabis. And if it ever is descheduled, that facility can really be the center of excellence for cannabis in the United States, as it's one of the biggest footprints in the United States. And we can grow to scale because of who we have growing with us and for us. So, massive opportunity within just that facility to go national, and of course, drilling down on all the other pieces that we're doing right now. And in aggregate, phenomenal story that really touches the states that we're in a significant way, and really enables us to get into some other states at a very low cost, very efficient way, expeditiously through brands and through products. And again, very exciting, most exciting opportunity I've ever been involved with. Sounds like lots going on, but it's a very disciplined process for each vertical that we're in. And we're drilling down as we speak. So we got some catching up to do, but not much when you actually see what's coming in the next couple of weeks. So I think, Ty, unless I'm missing something that we went through, I can't talk too much about pending acquisition and all the other stuff, guys, unfortunately, because that's just getting to definitive right now. And I'm hoping that we're able to finish up that stuff and give the market some really good news and put some numbers out that are really going to blow the socks off of the market. And again, really put us in a position and make it tangible in terms of what we're doing on the revenue side to keep everybody engaged and understanding the story.
Well, thank you, Brad, for joining us today. I know, unfortunately, we won't be able to have a Q&A session given that Red, White, and Bloom Brands is currently live on a financing.
Yes.
But thank you very much, for taking the time to present with us today. There is 5 minutes. I will offer you those up to you if there's anything else you want to touch on. Otherwise, we will take a 5-minute recess before we have our next presenter, Trulieve, and Kim Rivers there step in to present. So that'll offer you the time, and if not,
well, I think I've touched on everything I can and just sort of disclose as much as possible within what I'm able to right now. But I can tell you it's other than really getting exciting in the Michigan market. Illinois obviously is taking off, and through the PV stuff in California, when that comes to fruition, that's a really good management team, and I can tell you that it's only going to be accretive from there. So very excited about all of this stuff going forward. So really appreciate the time.
Thank you very much for joining us again, and we'll take a 4-minute recess here as we queue up Trulieve. will be presenting next. So
Thank you, Andrew.
no worries.